Welcome to Wine and Real Estate, the podcast where we drink wine, we have fun, and we learn about real estate investing. Real estate investing is so much more than just buying buildings. It's about building relationships, building your dreams, building your dream lifestyle, customizing your life. What do you want to do? What do you want to achieve? It's much more than money. It's more than getting rich. It's a different type of wealth. It's the wealth of time, the wealth of freedom. And now let's get to the wine and the real estate. Let's start this episode with some financing tips from our go-to mortgage broker, Streetwise Mortgages. Over to you, Dalia.
Hi, I'm Dalia, founder of Streetwise Mortgages. In today's episode, I will continue to share with you how to align financing with your chosen investment strategy. Today's strategy is long-term buy and holds of residential properties. That is, properties that are 1 to 4 units. If you're planning on holding a property for years to come, then give yourself flexibility and options with respect to the mortgage product you choose. On a long-term buy and hold, I put a lot of weight on flexibility, reserves, and easy access to equity for continued growth. As time passes, your property will very likely continue to increase in value. Your tenant or you on a primary residence will continue to pay down the mortgage. Opportunities will come your way that you would want to jump on quickly and in a cost-efficient way. And life will happen. Things pop up from time to time, from repairs to vacancies to sometimes hardships. As the saying goes, luck favors the prepared, and that is where an advanceable mortgage product on a long-term buy and hold comes in. An advanceable mortgage is a product that is offered with the various banks and lending institutions. A few lenders offer it only on primary residences, but the top 5 banks offer it on rental properties as well. Here's how it works. The mortgage comes with a secured line of credit attached to it. The line of credit is dynamic, meaning as you pay down the principal on the mortgage, the HELOC's limit increases automatically, which is a very powerful feature that gives you the option to re-access this equity without having to go and do a full refinance or go through the mortgage qualification all over again. Let's say you have a property that is worth $750,000 that is currently got a mortgage of $350,000 on it. If we were to switch this mortgage to an advanceable mortgage, and assuming that you qualify for 80% of the value in a loan amount, then the new loan would be a total of $600,000. Under an advanceable mortgage, we can split this into 2 components, a mortgage and a line of credit. So the mortgage component would be $350,000 to replace the old mortgage you had, and you would get a new dynamic HELOC for $250,000. Here are a couple of things that are really cool about this. Number 1, you can have your cake and eat it too using this product. Often, when a mortgage is paid down fully on an asset, you have to refinance to tap into the equity that you accumulated through the pay down. That is not the case with an advanceable mortgage, unless you want to tap into equity that accumulated as a result of a rise in market value. Let's say year 1, you paid down $15,000 of principal. The HELOC limit will increase by that amount, and you do not need to wait until the end of the year to access this $15,000. You have the option to do so as the amounts build up gradually over time. Number 2, the $250,000 line of credit does not cost you anything every month. Once you start using the funds, you can pay an interest only or a principal and an interest payment on the amount of money that you used. But let's say that at some point you have used a large chunk on your HELOC and you wish to pay it down like a mortgage. As a feature, you can roll it into a mortgage by calling your lender without going through a full refinance. And then that cycle starts all over again. As you pay down that mortgage, you reaccumulate the funds on the line of credit. Number 3, you can slice and dice an advanceable mortgage into various loan components to help you with your cash flow and mitigating risk. For example, at the time of setting up the loan, you can slice the mortgage into multiple fixed and variable rate components. And you can also set up various line of credits. Number 4, at times of tight cash flow, you can tap into the line to make a mortgage payment and then make an interest-only payment on the line. Let's say you have a mortgage payment for $2,000 coming up. You can pay it from the line of credit, then make a monthly interest-only payment on the line, which is drastically lower than the $2,000 you are going to pay. At today's prime rate of 3.7%, for example, your interest payment would be $6 for that $2,000 payment. I highly recommend setting up an advanceable mortgage on your properties when you can, not when you need it. In the midst of a rising interest rate environment, which is the environment we are heading into right now, qualification for such products will get tighter and tighter. If you would like to revisit your portfolio for opportunities to set up an advanceable mortgage, contact our team at info@streetwisemortgages.com. Cheers to your success.
Hello, everyone, and welcome to Wine and Real Estate. Let's drink to that.
Yes, bonsoir tout le monde.
Bonsoir. Cheers.
Hey, cheers.
Welcome to our guest. Ooh, Canadian mug. I love it.
Yeah.
So really excited to have you on to hear about Calgary and your story as well. And please correct me. Do we say your name Santhosh or Santhosh?
Okay.
Perfect. Okay, not too bad.
Yeah, I'm super excited to be here. Yeah, super excited to chat. All right, let's get started.
Yes.
All right.
So you're a real estate agent in Calgary?
Yeah, so I'm actually a pretty new agent. I started at the end of January, so it's been about 3 months now.
Oh, great.
So I started off as an investor, and then people started approaching me, be like, "Hey, is this a good deal? Like, could you run the numbers with me on this? Like, how does this look, right?" And I've always been interested in real estate, and obviously I started investing in 2018. That's when I started. But over time, like my network grew, and people started asking me questions. So I was like, "Why am I not getting paid for this? Right? I should become a realtor," and I really enjoy doing this. So then I started getting my license kind of late last year, and then finally started working as a realtor.
Oh, that's so exciting.
Yeah. So like right now, I'm just mostly working with investors for the most part, because I'm just leveraging my sphere of influence right now. So it's been all investors that I already know for the most part.
Makes a lot of sense. I'm always wondering what should I do, and Jennifer as well as a sideline. And I think Jennifer is more like choking your husband as a sideline. It's more like it. But for me, I do coaching and things. So I thought about becoming a realtor, which I really admire. It's a great way, like you said, to leverage the expertise you've built over 4 years now. Well, almost 4 years.
Yeah.
Which is great. So we'll have to connect with you next time we're in Calgary. We should be there. I'm not sure when this will be released, but in June we will be there for 2 meetups, Calgary and Edmonton. So we'd love to have you, and we'll have to discuss it. So
all right.
Can you walk us through how you started 2018?
Yeah. So yeah, I'll give you guys a timeline. So in 2018, I was still an undergrad student. I was going to the U of C, and I knew I wanted to buy real estate. I'd been watching podcasts and YouTube videos. Back then, there wasn't too many like resources tailored to Canadian investors. I think I started watching Graham Stephan on YouTube, and there was Matt McKeever, like back in his early days. He was just starting up all these videos.
That's right.
Yeah. So I was watching a lot of like his earlier videos, and I was like, okay, I kind of like this real estate thing, right? So I started looking at houses, and while I was going to school as an undergrad, I was kind of moonlighting. I was working at UPS at a warehouse overnight. I was working 6 to 7 hours, and then I would go to school and do like a full-time course.
Wow.
So
busy.
Yeah. So I don't know when I slept back then, but I survived somehow. And I was living with my parents, so I managed to save up a lot of money. Like I basically had no rent or anything, right? So all this cash, I had it all stockpiled in my account. And then 2018 came around, I was like, all right, I should buy something, right? But then I couldn't qualify for a mortgage, so that's when mom and dad come in, right? So I got mom and dad to help me get the mortgage, and then I found at that time it was an illegal basement suite. It's in a community here in Northwest Calgary. I looked at it. I had no idea. I was like, I mean, this looks like it's probably a good idea, so I just bought it. And it turned out it's a really nice property. Like, it was an older gentleman and he passed away, so the house was really well maintained and everything.
Good.
So that was my first property, and I got really lucky with the tenants. Like, they're gems. So, and they've been there since 2018, both the basement and the main floor tenants. So, and it doesn't look like they're going anywhere. So I just lucked out. But in that process, and after I bought that first property, I didn't buy real estate for another 2 years.
Which is smart. I mean, it was the first one. You were quite young, and you still are quite young.
Yeah.
So you kind of get used to it, and
exactly. So, like, for a couple of years, I didn't really know about the concept of scaling in real estate. I was like, maybe I have like one rental property that's probably like enough, right? And then I watched more YouTube videos, and then I kind of had a mindset shift over time. Hey, this could actually be a feasible way to get financial independence early instead of working for another 4 years, right? So then late 2019, I looked for my next property. I bought another property about just a few minutes from the first property. Okay. So it was in the same community because I really liked the area. I came to know the area a bit better. So this was an older property and it needed a ton of work.
Okay, very different. Number one,
very different. Yeah, very different from the first one, which was turnkey. So I have no background in renovations, construction, permits, nothing, right?
Surprise.
Yeah. At that time, that was the only thing I could afford because it was priced right, but it needed a ton of work. But I was like, well, let's just buy it.
That's how you learn.
Because I just didn't want to be looking at MLS deals every day and
for months, like
for months. Yeah, I was like, I got to pull the trigger, so I just did it. So that was at the end of 2019, and then I started doing renovations to the main floor because everything was dated, new kitchen, bathroom, everything. So, but I don't know who to call for a contractor. I don't even know what permit I need to apply for.
Yeah.
So I was watching YouTube videos on how to renovate. I would go do my classes and everything, and then I'd come in the evening. I would be renovating this house by myself till like midnight, 1 a.m. Right?
The UPS day is coming back.
Yeah, exactly. And then I'd go home, I'd lay in bed and watch YouTube videos on like how to lay down vinyl plank or something, right?
Oh my goodness.
Yeah. So I did that. Like, I did it in a really cost-effective way, and it turned out really nicely. And I posted a picture of that on Instagram as well. It's one of my older posts. Turned out great. I learned so much from that main floor, renovating the main floor. And then 6 months later, I saved up a little bit more. And I was like, okay, now I have to put in a brand new basement suite from scratch, right?
Oh, boy.
Yeah. So I gutted everything, and my girlfriend helped me out with it. We did some of the work together. And then I called the city, basically asked them, like, how do I apply for the permit, right? And luckily, I found that the city of Calgary is pretty good to work with. They've got a pretty good website. So if you look for zoning requirements and all that, it's nicely laid out.
Good.
You have a checklist, so you just kind of like bang it off and you should be good. So that was really helpful rather than like going into a mess, right? So once I did that, and then I asked a few people, like, hey, like, what comes first, right? Do I do the electrical or like
that's it,
right?
Plumbing, roughing, like do you need the waterproof? I have no clue.
Exactly. So like it was a huge learning process. So the second property was like, all right, I got this, and then I just managed to get it all done somehow. Just a lot of YouTubing, Googling, and asking people. So I did that, and then that was a BRRR. So I refinanced it, and I got like most of that money out. I think I was left about $30,000 into the property.
That's great.
It was said and done. But I had a brand new property because I basically took out everything and redid everything, right? So to me, leaving that $30,000 into the property was really not that bad.
No
big deal.
Exactly, because some people strive for perfect BRRRs, but I'm like, I don't really mind $30,000 into the property if it's a really
not bad, and it does help your cash flow. Like if you refinance to the very top, then it hurts your cash flow. So maybe no money left, but usually cash flow is lower. So
exactly. Yeah. So that was number two. then I refinanced. Now I've got all this money sitting here. And then I was looking, I was like, I want to get into something bigger now, because now I know
Yeah,
how
why
to,
not?
now I know how to, I have the basics of landlording. I understand like how the notices work and all that, how to deal with tenants. So I was like, I want to look for like a fourplex, right? And then this was in the middle of like May 2021. So I got a fourplex in the exact same community. So I kind of doubled down in that community.
You're the king of what neighborhood is it?
This is in Bonus. So everyone in Calgary,
yes,
most people who know me in Calgary, they just know me as the Bonus guy.
the king bonus, the bonus.
Yeah, exactly. Yeah. So I bought a fourplex there, and this was already like everything was legalized. The basements were all legalized and everything, but it needed cosmetic updates in a couple of units.
Okay.
So I've been like, it's been a work in progress. I've updated one of the units, and then I'm waiting for the other units to turn over, and then I'll get to that. And then that one I have a plan to refinance, but down the road. So it's kind of like a longer term, just because of how the financing was structured. I just have to wait it out, wait that 3-year term that I have. And then after that comes my most recent property that I'm working on, which is a duplex, also in the same community. And we're converting that into a fourplex. And I got into that property with a partner, just to overcome the financing aspect of things.
So mom and dad are out now.
Yeah, exactly. Now it's a joint venture. Exactly. So I'm the working partner on it, and then they're the financial partner. And I'm basically managing the renovations, because now I've shown that I could do it, right?
That's perfect.
Exactly.
So I have to ask you, Santhosh. So you bought all your properties in the same like little community there in Calgary.
Yeah.
Was that intentional, or was it just like, okay, they just keep coming up, so I'm just going to keep buying them? Is there a reason why you buy just in that community?
Yeah. So I've looked at most of the communities in the Northwest, and like I've looked at Southwest as well, but I just prefer the Northwest just because it's easier for me to manage, and it's kind of in a tight area. But the reason why I picked this particular community is I was doing a lot of research as to like, should I diversify or should I be okay to double down here? And I was looking at the Calgary is a development map. So if you can search up the development map. It shows you all the commercial activity that permits have been applied for and all that. And I found that around Bonas, there was a lot going on, right? And this was like a couple of years ago, when they haven't even started building, but they had just applied for all these permits, right? So there's all the
very smart.
So I looked at that, and there's this like I live in Bonas too, so like 5 minutes away from me.
Oh, perfect.
Yeah, there's this huge like plot of land that was like just a dirt pit for like 2 years. And it used to be like a greenhouse, and it changed ownership, and it was just a dirt pit for a couple of years. So I was like, this can't be a dirt pit in a prime location forever, right?
No.
I looked it up. I was like, who's the owner of this land? Like, which company bought it and all that. And I found their website, and I came to find out there's going to be a superstore coming there.
Oh, that's going to change the whole area.
Exactly. So I was like, well, all the more reason to invest in this community. And so I figured I'm just going to double down. And another reason why I picked this community was the options that I have. So in this community, I can do a long-term rental. It's also a fantastic area for Airbnb.
Oh, nice.
Perfect.
Because it's situated on the edge of the city.
Yeah, so, it's fairly central.
It's on the western like edge of the city. So right when like if you want to leave to Banff, this is the fastest way to get out of the city. Right?
Okay.
And likewise, when you want to come in to the city from Banff, this is the first community you'll kind of like encounter.
Wow. So nice lifestyle, the mountains, and
exactly.
And during the week, you go home, and lots of conveniences and lots of activity.
I think it'd be a great spot to Airbnb. So,
that's great.
I haven't dabbled into Airbnb yet, but that's definitely something I want to explore in the future.
Yeah, maybe one of your 4 suites and your duplex to fourplex conversion, maybe one of them you could try as Airbnb, see how it does, and worst case you back out.
Yeah.
That sounds great.
Yeah.
So now you're also a real estate agent that is focusing with investors. So obviously you're not just selling in Bonas.
Yes.
So
Yeah.
can you tell people why is Calgary a good area for real estate investing? Like,
we've heard lots of horror stories. We're in Ottawa, so people always say, "Oh, Alberta, it's boom and bust," and now you're investing all your money there. But we know, but we want to hear it from you.
Yeah.
What's happening in Calgary?
Yeah, why Calgary?
Yeah, so Calgary has a pretty young workforce compared to other parts of the city, and in the past few years, we've seen the tech industry start to come up in the city. Whereas previously, before that, it was mostly oil and gas reliant.
Yeah.
But now there's more diversification, and with the shift to green renewable energy, there's even more money coming to the province for like looking at lithium mining and stuff like that as alternatives for electric vehicles. So there's a lot of money coming in, and Calgary also had the highest GDP per capita across Canada last year. So
I know it's insane. The salary disparity and cost of living, there's a huge step. Like compared to Ontario, salaries are much lower and housing is like way more expensive. So.
Exactly. And like it's just a nice city to be in compared to other cities in Canada where there's less congestion. If you want to get to somewhere, you can get there reasonably quickly. Like within 30 minutes, you could basically reach anywhere in the city.
Huge highways. I can't wait to show Jennifer later this summer.
Exactly. So like very little congestion for the most part, and it's just a lot of stuff to do in the backyard. You've got mountains, you've got mountain biking trails. You could hike for days if you want, right? And so all that makes this place really attractive, and it's also set pretty strategically located compared to, for example, Edmonton, right, where Calgary's right on the Trans-Canada. And it's also like the western hub for like CP Rail and CN Rail. So there's a lot of distribution, like all the distribution headquarters are here, right? Along with oil and gas corporate headquarters, all of them are centered in Calgary versus like Edmonton.
And the weather is interesting. I was there in February and I was wearing running shoes, while in Ottawa we had how many meters of snow? It was insane. So it's interesting with the Chinooks and things that it really creates a nice kind of vibe. Yes, it can get quite cold as well, but we get cold and snow. You get less snow, so
exactly. So it evens out overall. So for all that reasons, like I don't see why anyone should not invest in Calgary. But I guess I'll give one like kind of word of caution. Calgary has an up and down market, and I don't expect that to go away anytime soon, even though we have like a tech boom coming in. So I would caution that any investors looking to invest in Calgary should be able to hold it for the long term. So like right now,
it's a flipping town. It's a place to buy and hold and BRRR and keep.
Exactly. So that's just one thing to keep in mind.
I like it. And it's smart to have we have a very diversified portfolio now. So for those listening, you know how diversified it is, but it's good to have Calgary kind of your long-term play, and then you could do more flips in the GTA or Vancouver area, or even Ottawa now is a good kind of flipping place, and then other countries too. So I like this as part of a balanced diet for real estate investors.
Exactly. Yeah, so our rental market has been very stable. And if anything, it's gone up in the past 6 to 8 months. When the housing market here started taking off, the rental market went with it too. So rents are also going up now.
So how is the housing market in Calgary for people who are maybe considering it? Like, is it price wars? Is it like even in the multifamily space? Maybe just give us an idea of what it's like.
Yeah. So on the kind of residential side, 4 units and below, it's still a pretty competitive space. Any properties that are that show well and they're priced reasonably well, they're going to be gone it'll be going into multiple offers. So you've got to be ready to. But a lot of advice is stick to your numbers, right? That's important as an investor. Like we don't want to get emotional. So that's what I've been advising my clients. Like it's a great property. If you miss it, there's going to be another one the next day.
That's it.
Yeah.
Exactly. Whereas on the commercial side, things are like it's a pretty competitive space, and our commercial market or multifamily units are fairly expensive relative to even some parts of the GTA. Because I've had Ontario investors reach out and be like, "Your price per door is $200,000. That's insane, right?" But it is what it is, especially in prime areas. Because a lot of our multifamily is also located in kind of inner city areas, so you've got the land value component to it.
Yeah,
it's not just the price per door, the NOI, and the cap rate. You've got the land value, right? So in 10,
and
20
transit
years,
is close by and convenience and work.
Yeah. So a lot of kind of newer multifamily investors fail to realize that aspect of it, that you're also kind of paying for the land, right? It's not just the business viability of the multifamily building itself.
And people are all about cash flow. Well, that's the biggest thing for us is cash flow. So now if you're paying more per door, then it's more of an equity game, maybe a longer term play. Just like you said earlier, same thing applies now. You need to hold it longer, $200,000 per door. We're seeing that in Moncton, New Brunswick, of all places, and up from there. Like 200 is nothing, and so that's actually sounds like a bargain. But the rents tend to be, I found, a bit lower in Calgary versus Moncton, depending on where you are. I don't know why, because salaries are way higher in Calgary. So there's kind of that discrepancy that I think will be corrected with a hot market. Ottawa was the same. Rents were quite low for many years. Now rents have crept up. And Toronto as well, rents were not too bad. Now it's just insane, but
I think for sure, at least in the apartment sector, like our rents they're definitely lagging. But they're definitely not lagging in the single family or, the main floor and basement suite type of houses.
That's it.
They're super competitive.
I think it's a different culture, because a lot of people, I was impressed when I was in Calgary. A lot of people have pickup trucks, and at first I'm like, I don't know why. But when I started driving, I understood why, because the roads, you don't use salt because they get too cold. Salt is not effective. So you can't just have a little car. You're gonna be in trouble. And living in a big apartment building, it's usually underground parking with a big pickup truck. It doesn't quite work for the lifestyle people are
exactly. If you want to throw bikes in the back and go to the mountains, you can't really do it in a little car. So so
that is a lifestyle. People have to understand who's your buyer or your renter, and how do they live. They want some outdoor space. A balcony is not super conducive to that. So
exactly. And for that reason, a lot of multifamily buildings, I guess the ideal place to buy those buildings would be closer to the city center. There are multifamily buildings kind of in the suburbs, but it's going to be harder to fill them. The vacancy rates are going to be higher, and you're going to get more turnaround, right? So for that reason, for anyone looking at multifamily in Calgary, I would recommend stick to the inner city, because that's where it's going to be more walkable. It's more for the city dwellers who are going to take transit or walk to restaurants, bars. That's going to be your target audience.
And you have some beautiful inner city neighborhoods. I liked it. I can't remember the street name, but there's some nice streets you walk and everything's there, and it's still affordable to live that.
Maybe?
Yes, I think so. Yeah. So lots of great conveniences.
Exactly.
So what do you like the most about real estate investing? Because you've mentioned kind of what you've done. It sounds like fun, but to some people, like what's driving you behind all this?
So real estate, it's kind of tough one to answer, because I've always been real estate like naturally, right? Like I'm just drawn to houses. I'm like, wow, they're cool, right? Like this is an income producing asset. And the best part about real estate investing is I control the success of my business. Whereas in something like the stock market or crypto or whatever,
you have no control at all.
No control, right? Whereas with, let's just say, my fourplex, I want to generate more income. I'm going to put some money into it, renovate the units a little better, raise the rents a little bit, and then I can get the return that I'm looking for, right? And it's a long-term game where my cash flow only increases with time. Whereas with the stock market, it's harder to tell because it goes up and down, and you never know when someone's going to shut their doors, say our company's closed, right? So that's the main reason I like real estate. And like, it's a physical asset. No one's going to be able to take it away from me, right? It's always going to be there. Even if the building's not there, the land's going to be there, right?
That's so true. What a good point.
Yeah.
So somebody who's starting out in real estate, what kind of advice would you give them? Do you have like a maybe a top
go-to tip
that they could use when they're looking at the Calgary market, buying Bonus?
Bonus, yeah.
So the top tip I would give is do your research, but don't take forever. Jump right in and then figure it out.
Yeah, I love it.
That's good.
Really experienced investor. We were in Toronto. When was that? November of 2021. We were on a bus tour with this investor who owns entire city blocks.
Yeah.
And he said, you should know about 30% of the information and make your decision, not 70. A lot of people are like, oh, I need to get to 70, 75%. Sure. It's like, no. 30%, you're good. Just take action. If not, you're going to be stuck in analysis paralysis.
Exactly.
Just like you mentioned Bonus. Okay, it makes sense. You know the information. It's just easy. It's a no-brainer. And worst case, you hold it longer. You do Airbnb, which is very fortunate. We don't have that opportunity anymore. In Ontario, they're cracking down on Airbnb and pretty much any revenue generating models. So you have to be very creative now here to invest and be successful.
That sounds tough.
Yeah, it's tough. The rules are kind of against you. Here it's more bigger deals, like really large multifamily, because you need the economies of scale and become like a Dollarama. So
yeah, it's true. But yeah, that would be the advice I'd give. Like, don't sit on the sidelines forever, because the market might end up running on you, right? If you take too long.
That's it. And the prices keep creeping up. Even in Calgary, like, they've really increased.
They're not getting cheaper.
No, 2018, you got some deals. I'm sure you're not getting those deals in 2022.
No, there's no way I'm going to see those ever again.
No. And you're sitting on equity growth, like you mentioned earlier. You're going to refinance the one you got in 2021 at some point, but it keeps increasing, and you get that mortgage pay down. So it's just a win-win for you.
Exactly. Yeah. So yeah, overall, I'm very happy with like my personal portfolio, and obviously I'm looking to scale with more doors in the future.
Awesome. So how can somebody get a hold of you, Santhosh, if they want to find out more about the Calgary market, if they want to get some real estate investing advice or get a property with you?
Yeah, definitely. I'm on Instagram, so my Instagram handle is at yyc.re.investor. YYC is Calgary, so Calgary Real Estate Investor. And then on Facebook, facebook.com/yyc.reinvestor, or just Google my name. My phone number is plastered all over the internet. So
perfect.
Easy to find. And you do share some interesting tips and tricks on your social media. So we've been following you for a little while, and I really enjoy it. So I invite our listeners to reach out to you and find out more about Calgary. What are the options? Buy with you, or invest with you, or at least ask you some questions. I think it's well worth it.
I'd be happy to help. Just if it's just general real estate investing advice, or if you're new to real estate investing, always happy to help.
Very good. You sound like a smart young guy, so I think that you're definitely the person to follow for Calgary.
Yes. Well, thank you very much. We'll have to follow up with you in a few months, maybe 6 to 12 months, and see where you are, what's going on with your progress, and meet you in person in Calgary next time.
Absolutely. Absolutely. Looking forward to that.
Well, thank you, everyone. And
thank you.
Take care.
Cheers.
Cheers. Yes.
You can share with your coffee. It's okay.
Yeah, we'll forgive you. All the best. Bye.
Bye-bye.
Hey there, listeners. We hope you enjoyed this latest episode of the Wine and Real Estate Podcast.
Yes, absolutely. You can find us on Instagram. Our handle is wine_and_real estate. So wine and real estate. On Facebook, FL Homes Corp. And you can also find us on our YouTube channel.
Yes, and please make sure to give us a rating, 5 stars, or any comments. We'd love to hear from you. And we love suggestions as well. Cheers.
Yeah, chin chin.